In this video, I'm going to go over why price action trading works. I think it's quite important to understand the nuts and the bolts of price action, as well as just being able to identify patterns. As always, please do subscribe to Decisive Trading if you are learning how to trade. It's free and there will be a lot more trading videos to come. Okay, before I start on the price action itself, there's a lot of traders who they focus solely on price action. They don't take into account market fundamentals. That's completely fair enough. In my opinion, it's good to have at least a handle on the fundamentals of whatever market you are trading. This is because, especially news events can radically alter the way a market moves. It can create very strong volatility, and it can also completely change the long-term trend of the market. It's very easy to check news releases. You can go on to dailyfx.com/calendar. This is an absolutely free service. When you load it up, it comes up like this. All I do is I look at the importance right here. I scroll down. All I'm looking for is high importance, because I know high importance is likely to create high volatility. This is in an American market. I know this quite often. The American news can influence the FTSE, so I would take note of this. This is on Monday the 3rd of August. All I'm doing is noting it. I don't even note it down anywhere. I just note it in my mind, so I can be aware if I'm in a position. I may tighten my stop as it approaches 12:30. I may tighten my stop as it approaches 2. I may close the position if I'm already in profit and it's a news event that is highly likely to alter the market. Another thing with indices is earnings reports can have a big influence on the market. So if one of the key companies in the FTSE 100 is releasing earnings, or they have some negative news coming out or positive news, I know this can likely affect how the market moves. So it's good to be aware of this. You know, you've got broadband, you're sitting on your computer anyway. It takes 2 minutes to check these things. Okay, so down to price action, why it works. A lot of people, when they're trading price action, they are simply looking for patterns. They're looking for, could be a rising wedge, could be a double bottom, double top, could be pin bars, could be engulfing bars. But it's also important to understand why these work. This will also help you identify areas where you should ignore these signals. So the way I look at a chart is I see it as a drawing of people's emotion. So when you see bullish sentiment in the market, it's simply people believing that the stocks are undervalued or the currency pair is undervalued. When you see bearish moves, it's people thinking the stock is overvalued or the currency pair is overvalued and it's falling. Now, what happens with these is people's emotions get tied up in it. So as you can see with this move going up here, this is a strong bullish move. We start off here with a very small pin bar. I have no idea if this is support or resistance. I'm just explaining this to you. We then have a fairly strong bullish candle. Now note the next candle is larger. Note the next candle, it's even larger. This is people jumping on the market. This is people's fear of missing out on a move. They are jumping in and riding the market up. It's also stops being taken out. So when it breaks this high here, most likely people had stops above here and it's taking the stops out. It's important to understand this because quite often you can look at this, especially as a trader who is new to the markets. You can see this bar forming, or maybe this bar forming. You've seen this large move. You think you're missing out, so you try to jump on. This is how the market is going to ruin your account. You need to understand that this is purely driven by mainly greed. If you see large moves like this in the market, it's mainly greed. It might be a news release. It's not a good idea to jump onto this. Now, when you're seeing candles up here like this, where they've got tails, what is happening is the market is pushing higher. And also you've got to realize is at one point this looked like a strong bullish candle as it was forming. So people were buying into this. What they were probably doing is betting on this being a move up and then a pullback right down to here where they buy again. But you can see the market gets up to here and then it rejects. Now the reason the pin bar works is because we've seen, if it's on a support and resistance area, we've seen that the market has rallied up, so there is bulls interested. However, the key is they haven't been able to push the market higher. They haven't been able to hold the market. Instead, the market has turned around and fallen. So this ties in with emotion. You have to see that people who have bought into this market are now sitting in negative equity. This is very important because these people now are looking at this move and they're thinking, oh, I expected this to rally higher. They are now worried. As the market pushes down lower, their fear increases. And at the same time, the bears start to get in the market. Let me just show you right here as well. This is exactly where stops are going to be for everyone who has now thought they've bought the pullback. You know, you've got a lovely pin bar here on the pullback. You'd need to understand the overall look of the market. I've actually analysed this market this morning. I had this market as negative. I actually did take a sell off of, actually I took it under this candle right here. I got confirmation and I held the market down and got out. This will be in the video that I post on Wednesday where I review the FTSE. But anyway, so the market has pushed up here. People have expected this to be a pullback. All the literature says buy the pullbacks on trends. So they bought into this market and it's pushed up. Now I'm looking for reversals here because I know this market overall is negative. I get my reversal. I know that the stops are going to be down here, just below this candle. So that means that my exit should be either just where the stops are or just above. I don't need to take the market right the way down. As I've already explained, I trade the market. I'm happy with 15 points, 10 points per move. That's how I trade. But the reason it's handy to know where people are putting their stops, I'm using the price action to tell me. I know that the market, when it hits stops, it tends to bounce, push through it very quickly. So it means that if my limit order is right around the stops, maybe just above it, I'm very confident that the market will push through, because even if this turns around and becomes positive again, a lot of the time market makers will shove the market down. Your broker will push the market down just a little bit, take out the stops, and then it will turn. Let me just find a couple more candles I'm going to explain to you. This candle right here. So if I cover the screen here like this, a lot of people are going to see this as a strong rejection, especially after this bar. They're going to see it as a positive move. They're going to want to buy into this market. Now, this is not a positive candle. Even if this was green, this was bullish rather than bearish, it would still be a negative candle. The reason is the market has pushed all the way down here. The bulls have then stepped in. They've forced the market up. And then the market has fallen away again. It has not made a new high. It has not closed at a new high. Sorry, it's made a new high, but it's not closed at a new high. This means that although the bulls have tried to step in, they have been unable to gain control of the market. So if the market then falls away from here, then you can see that the bears still have control. Okay, let's look for one more candle, which we'll go over. Let me try and find a strong engulfing candle. This is on the 5-minute time frame. This is the main time frame that I trade. Okay, so right here. So you can see this move right here is falling away. Now again, people are going to be worried that they're missing this move. They're going to want to jump on. This candle right here is extremely bearish if you don't know what you're looking at. This candle has come at the end of an extended move down. This often appears at the end of a strong move. You'll get a very large candle. This is basically the last burst of energy of this move. So everyone who doesn't really know what they're looking at, they're jumping on now, trying to sell into this market. Maybe they're adding to their positions, and the market turns around straight away. This is price action at its core. It's not just about, oh, there's a pin bar, oh, there's a pin bar. It's not just about looking at, oh, there's an engulfing candle. It's not enough. You have to also understand the market structure. You can find out a lot about this online. There's countless books out there that you can read. The key is to read or watch the video, whatever it is you're doing, but to also make sure you understand. To also jump onto the charts and look and find these areas and explain it to yourself internally why it is working. Because you'll save yourself a lot of losses. Just trading price action off of support and resistance, you can make money. Lots of people do it. But for me, I want to make as much money as possible out of the markets. I don't want to keep giving the markets money. So understanding price action, also having an overall view of the fundamentals, and also understanding exactly what the price action is telling me, not just the pattern, not just looking blindly at support and resistance and thinking, oh, that's a signal, I'm going to enter. I need to understand the overall view of the market. I need to understand what each candle is telling me when it reaches my zone. And that takes me down, my losses down to a bare minimum. You know, everyone has losses in trading. It's just the cost of the business. But if you want to be truly successful, try and eliminate as many as you can. And to do this, just learn the charts, understand the market. Each market has its own personality. You will become accustomed to this as you trade each market more and more. That's why I focus solely on the FTSE. I know the FTSE like the back of my hand. I don't need to trade other markets. Every market moves differently, especially on the 5-minute time frame and down. Okay, so I hope that was helpful. Sorry, that's my phone ringing. I hope that was helpful. Do subscribe to Decisive Trading if you are learning how to trade. There's a lot more videos to come, as I keep saying. And I hope you have a great rest of your week. I'm James Orr. Thank you.